In today's video, I want to go through a very simple 5 ETF portfolio that's completely full of high yielding ETFs. And I want to share 5 names that I would choose as of today if for whatever reason I could only choose 5 high yielding ETFs to carry me all the way through retirement. Now, this was not easy to pick 5 different ETFs because I sort of have shiny object syndrome. I hold tons of different stocks and ETFs across the market. And even though some positions are very small, some are larger, I have a ton of fun doing so. Now, all that to say, if you want to see which 5 higher yielding ETFs I would include in my retirement portfolio, then make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, number 1, the first ETF that I would hold on to if I were only able to pick 5 higher yielding ETFs to carry me through retirement as of today would be DIVO, or the Amplify CWP Enhanced Dividend Income ETF. Now, DIVO is an ETF of high quality large cap companies with history of dividend and earnings growth, along with a tactical covered call strategy on individual stocks. DIVO is strategically designed to offer high levels of total return on a risk adjusted basis. Now, the reason I would have to add DIVO into this 5 ETF portfolio is just because DIVO is relatively low beta. It offers like a 5% yield more or less starting. It offers monthly income, and not to mention, this ETF over time has offered investors like myself, because I've held onto it for years, around 12% return every single year. Now, because I'm pretty risk averse, I like DIVO because it's sort of a calmer position in my long-term portfolio that maybe isn't going to be the fastest grower, but also not going to lose as much money during bear markets. I also like the fact that DIVO offers exposure to large cap names that I otherwise probably wouldn't have all that much exposure to in my long-term portfolio, but because of the covered call overlay on individual names, this ETF is not as high beta and offers a lot more income generation too. All to say that if I were only able to choose 5 different ETFs that all are relatively high yield, I would have to choose DIVO as one of them. Now, the next position in my retirement portfolio, if I was only able to pick 5 different higher yielding ETFs, would have to be SPYI, or the NEOS S&P 500 high income ETF. Now, this position would sort of cross off my S&P 500 exposure. I can't add VIO or SPYI or anything like that, so we have to add something that offers exposure to the S&P 500 but through a high income strategy. Now, the investment objective for SPYI is to seek high monthly income in a tax efficient manner with the potential for upside appreciation in rising markets. Now, SPYI has been great since inception, more or less been paying us around 50 cents per share per month, which gives us around a 12.5% distribution rate as of right now, which I would consider decently high yield. Now, SPYI also has not NAV decayed over time, so even though it's offering a greater than 10% yield, it's not like the price of the ETF has been driving down into the ground. Now, like I mentioned, in my long-term portfolio, if I were building a portfolio of 5 positions for retirement, I would want to have some S&P 500 exposure. I personally like having exposure to the big indexes. And even though there's tons of different higher income ETFs across the market these days that do offer S&P 500 exposure, I think the NEOS S&P 500 high income ETF is one of the best to do so. Now, I say that because this ETF offers, like I said, a steady or stable NAV. It also offers consistent-ish income in the form of around 50 cents per share per month every single month since inception. It also is very tax-friendly and offers a ton of income in the form of return of capital. Now, the next position would have to be OMAH, or the VistaShares Target 15 Berkshire Select Income ETF. Now, again, this was sort of hard for me to just pick 5 ETFs because, again, in my long-term portfolio, I have tons and tons of positions, which I admit I have to settle down with. But OMAH, the VistaShares Target 15 Berkshire Select Income ETF, offers you exposure to some of the top holdings in the Berkshire Hathaway, or BRK.B, as well as leveraging an option strategy in order to earn around a 15% distribution rate. Now, the reason I would add this into the portfolio is just because I believe long term that many of the names in Berkshire.B are probably going to be pretty stable. I mean, Berkshire has done very, very well since inception. Names like Apple, names like Coca-Cola, names like American Express. I mean, these are some blue chip names that honestly would definitely allow me to sleep well at night. Not to mention, because of the use of options, OMAH is going to be somewhat hedged and also protect against some downside during sideways or down market. Now, with OMAH offering a 15% yield, I would definitely consider this up there with higher yield. I mean, with a 15% distribution rate, you can definitely generate some income even with a relatively small amount of money invested. Now, again, in the context of this video, thinking of names for retirement, ETFs like this are going to give me what I want for retirement, especially when we're talking high yield, and give me some exposure to some names like I really hopefully won't have to worry about. The next position in this 5 ETF portfolio for retirement, all high yield ETFs would have to be QQQI or the NEOS Nasdaq 100 high income ETF, which also generates around a 15% yield. Now this ETF is also from NEOS and offers exposure the NASDAQ 100 index and implements, again, a data-driven call option strategy. With the NEOS NASDAQ 100 high income ETF, we're talking once again a stable NAV that also can grow over time, but along with that high income generation, around 60 cents per share per month, more or less on average, and again, very tax friendly, knowing that this ETF distributes a ton of return of capital. Now, the last final ETF in this 5 ETF portfolio, and definitely like this video if you guys want to see more of this type of thing in the future, it would have to be BTCI, the NEOS Bitcoin high income ETF. Now, this might shock you guys because I'm really not much of a big crypto guy whatsoever, but I do think that if I were to have to choose to build a portfolio today that's going to solve for everything I'm going to need way later on in life, I do think some Bitcoin exposure through a high income strategy could definitely be wise. Now, this ETF seeks to generate high monthly income with the potential for appreciation based on exposure to exchange traded products or ETPs that have direct exposure to Bitcoin. So if Bitcoin does very well, great, this ETF probably is going to do also. If Bitcoin turns into nothing in the future, this is of course going to be risky. But because Bitcoin's pretty volatile, the distribution rate is massive. We're talking like $1.50 per share, $1.20 per share per month. Now heading into the fact sheet for BTCI, it says the NEOS Bitcoin high income ETF seeks to generate high monthly income with the potential for appreciation based on exposure to ETPs that have direct exposure to Bitcoin. The total expense ratio is about 1%, and the ETF offers high monthly income generation, Bitcoin upside potential, and professional option management. Now, I think that products like these do have a good place in the market, especially for someone like myself that doesn't necessarily want to buy and hold on to Bitcoin, but wouldn't mind having some exposure to Bitcoin through a high income strategy. Because let's be real here, as a dividend investor, I don't really want to hold on to something that's ultra volatile, especially through a growth investment. But let's talk a little bit about how BTCI actually generates so much income, or at least has generated so much income since inception. If you look at the ETF that BTCI is utilizing here, it's the VanEck Bitcoin ETF, or HODL. And if we come over here and look at HODL's implied volatility, or IV, we can see that HODL currently has a 52.5 implied volatility, which is very, very high. Now, to give you an easy comparison, we all know that Nvidia stock, for example, is also rather volatile. I mean, compared to most things in the market, we would consider that, right? Nvidia stock has a 35.4 implied volatility, so HODL has almost double that, and this isn't even at the highest point that we've seen HODL over the past few weeks. Now, in my real portfolio, I do have some exposure to Bitcoin through high income ETFs like this one and others, but only in a small fashion just because I'm sort of a conservative investor. I'm pretty afraid of risk, but I do believe in Bitcoin long term. I'm hoping that it does very well, and again, if I were to pick just 5 ETFs, I would have to include this one also. So those are the 5 ETFs I would choose for my 5 ETF retirement portfolio if we're talking higher yield. Now, some of these higher yielding ETFs are probably going to perform better than others, but they all sort of have their place in a long-term portfolio, at least if you ask me. So now that I share with you guys my 5 ETF retirement portfolio, that'd be made up of things like DIVO, OMAH, BTCI, QQQI, and of course SPYI. I lastly, most importantly, want to hear from you guys down below. If I were to ask you today, knowing what you know as of right now, to build a 5 ETF portfolio that's high yield and only full of ETFs, what would you choose? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.